Hey, I'm Dan Fitzpatrick at StockMarketMentor.com. Look, every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas, well, to make some money, okay? Look, good trading takes more than just hitting the buy button after the opening bell every day. Let's go beyond the TV screen and check out these three stocks I saw on TV. Today we're going to look at Reynolds American, Qualcomm, and Coke. We'll start out with Reynolds American, okay? Just a good old American tobacco company. What could be better than that, right? I'll tell you what's better than that is you could call this a little cup and handle, I guess. I just call it a continual bounce off of the 50-day moving average. By the way, Philip Morris and Altria are essentially doing the same thing. New highs all the time. Here's one thing that I don't think Pete mentioned. The dividend, 3.28%. Now, it used to be higher when the stock was lower, but 3.28% on a stock that's essentially bulletproof, about as close as you can be, is a good deal. I like Reynolds American. If it would pull back to 50 or even maybe a little bit below 50, that would be a great time to buy. But here's the thing on this stock and on the other tobacco stocks too. You're kind of in this for the long haul. The trend is a really clear trend. And so you don't have to rush in and buy this stock all at once. You can scale in. You can take a very small position in the stock just to kind of get it in your portfolio so you don't forget about it. You can take a small position, and then if the stock ultimately does pull back to the 50-day moving average, you can buy more. On the other hand, if the stock just kind of seems to drift sideways for a while, and the 50-day moving average ultimately catches up to it, well, then you buy more as well. But the bottom line is you're managing your risk, okay? I talk about this all the time on Stock Market Mentor. You're managing the risk of missing out on the upside versus the risk of getting caught on a downside move. So you can kind of split the difference here with Reynolds American. Now, Dan Nathan likes Qualcomm to the short side. He thinks that this is a stock that you can short down to 45 bucks. I don't know, frankly, about the $45 level, but let's look at this. Okay, the weekly chart, this is absolutely not a stock that you want to be buying here. The way this has been trading, I think it's a fair guess, and that's all it is a guess, that 42 would be the bottom. I mean, just look at, let's just draw a couple real straight lines here. Okay, lower highs, lower lows, but the lows are just diverging. They're getting further and further away from the highs. Okay, this can't keep on unless ultimately the stock does a snap hook and starts going the other way. Obviously, it's not going to do that. So this is a stock that's looking for a bottom, and I like shorting downtrending stocks. This is kind of a rule, and it's a good rule. I didn't make it up. The market makes it up. I like shorting downtrending stocks when they're done snapping back. Right here, I could even make a case for here. This is a weekly chart, so we're going really slow motion. Here, move, another attack to the 200-day moving average. Now this looks like it's moving lower. So I like Dan's strategy of shorting this stock. I would keep a buy stop if you're going to do that. Let me make a little green box here because you'd be buying, you wouldn't be selling. I'd keep a buy stop just a little above 56. Hopefully you're not going to get clipped. And by the way, if you want a tighter stop, seriously, you could put it right up here because after all, the 200-day moving average hasn't really been relevant. It's just been kind of drifting down because the stock looks like it's going straight down to heaven's basement here. So you could actually keep a tight stop a little bit above 54. So you short the stock now. If the stock moves higher from here, you know you're wrong. Okay, well, it's called trading. If you can't handle that, you need to just get on your big boy pants and do something else because that's going to happen. But as far as a $45 level, it's like down there, I think you might be asking a little much. If you're shorting it here at 52 bucks, I'd look to get out at 48 bucks, something like that. That should work better. Now, Guy, he's a Coke guy. No, not that Coke. I'm talking Coca-Cola. Okay, decent dividend here as well. This stock has been trading sideways, seems like forever, but it looks like it's kind of a high base. It's a new high or close to it. just today as I record this video. So I like Coke. I would prefer to get it on some kind of a pullback, even to 43 bucks, something like that. But ultimately, I think the stock moves higher, so I like what guys got to say. Okay, that's it for this video. I hope you like these 3 stocks I saw on TV. Now let's go make some money.